Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Matthew Patterson. He's the co-founder of HANDLS Indexes. We're going to learn more about the Nasdaq 7 HANDLS Indexes in conjunction with Nasdaq Dorsey. Right, Matt, it's great to have you with us at market site. Great to see you in New York.
Thank you. Thanks for having me here.
All right, let's learn more about this. Tell us a little bit more about the development of the ETF business, the overall landscape.
Yeah, through the early years of the industry, most ETF product development really focused on what we call exposure products or beta products like the S&P 500 index and other types of products that give you access to a particular segment of the market, but don't necessarily attempt to do anything beyond provide that exposure. We've also seen a lot of success on the part of sponsors with what we call thematic ETFs that focus on a particular industry niche or developing area, like the cannabis ETFs or the data security ETFs. And so over the course of that time, the industry has developed a toolkit of products that are really useful, but what we really haven't done is create a set of solutions that really take the next step to solve investor problems. And one of the biggest problems out there for retirees and those who are approaching retirement is how to manage that decumulation phase when you're no longer looking to save money, but now you have to live off of your savings going forward. And that was really the impetus for the creation of the Nasdaq 7 Handle Index, was to create a product. It consists of 19 ETFs that together hold 20,000 different underlying securities, including bonds, stocks, and other income-producing vehicles like MLPs, junk bonds, REITs, etc. And the idea was to create a diversified portfolio that could be expected to generate high risk-adjusted returns that could support a high distribution over time. So from a category perspective, this would be considered a balanced fund, and it targets a particular level of risk that remains constant over time.
So you mentioned that it has stocks and bonds within the index. Can you provide a sense of the size of the market for funds that provide this type of exposure?
Yes. Balanced funds have been around for quite some time now. To look at it from maybe the 30,000-foot view, in the mutual fund space, there's $17.7 trillion of total assets under management. About 8% or $1.4 trillion of that are held in balanced funds. Now, most of these are actually target date retirement funds that have become a default option in many 401k plans. But we've seen in the mutual fund side that there is a lot of demand for these types of balanced fund solutions. Now, the ETF side, it's a different story. There's $3.4 trillion in the entire ETF industry, but only $9 billion in balanced ETFs, which is not even, it's less than 0.01% of the entire category. So balanced funds have not had as much success on the ETF space as they have on the mutual fund side, but the category has grown to $9 billion, whereas it was at $1.5 billion in 2013. So it's grown about 600% from a small level, and I expect that it will continue to grow in the future.
Well, there's only opportunity for growth.
Yes.
So that's a good thing. Now, Nasdaq 7 Handle Index, how does it differ from other balanced funds and indexes that are available on the market?
You know, I think traditionally balanced funds have been a way for fund companies to kind of repackage their existing fund offerings into another offering and create another revenue stream. And they also typically kind of manage the risk of those funds somewhat arbitrarily. You know, with the target date funds, they actually have the risk declining over time as retirement gets nearer. And we have kind of two responses to that. The first is that we want to be an open source provider because we think there's a lot of great ETFs out there from a lot of different great ETF sponsors, and we want to be able to use any of those in our indexing solutions, particularly the ones that deliver exactly what we're looking for and do so on a low-cost basis. But the second component to that is really, you know, what level of risk should you be targeting in a portfolio? And our view is that the portfolio that earns the best risk-adjusted returns, that is, that earns the highest return per unit of volatility, is the optimal portfolio. And every investor should be holding that. And if you are looking to generate a high-income portfolio, the portfolio that's going to do the best job of supporting that distribution rate over time is going to be a high Sharpe ratio or a portfolio that earns high risk-adjusted returns. So that's where the 7 Handle Index comes in. We basically created a core and satellite index here. Half of the index is just a 70-30 fixed income equity split that's allocated to the least expensive broad-based equity and bond funds in the U.S. And the other half is more of a tactical approach. It allocates to 12 different ETFs, all of which are high income producing sectors. And we use a Nasdaq Dorsey Wright overlay to reweight that portion of the index on a monthly basis using yield, volatility, and momentum. And we found that that's added a nice little tweak to the performance over since the launch of the index.
All right, well, let's talk about that performance. How well is it done?
We've been very pleased with how it's performed so far. With any balanced fund, you will expect it to perform somewhere between the bond market and the equity market. But what we set out to do was create an income product for investors that would have less volatility than other income products like closed-end funds or junk bonds or REITs, MLPs. And that's exactly what we've seen. Now, looking at the Morningstar rankings for the fund that tracks our index, they've been very good. It is in the 30 to 50% equity allocation category that Morningstar maintains. There are 550 ETFs approximately, or mutual funds and ETFs in that category. It's in the top decile for every period since its launch. Now, interestingly enough, that category only currently has 11 ETFs of those 550 funds. The rest are all mutual funds. But of those 11 ETFs, it's the best performer year to date.
All right, let's wrap on that. Very good news. Thank you so much for joining us,
Thank
Matt.
you, Jill.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.